Hey everyone, welcome back to another video on the channel. Today I finally have gotten around to making a special tutorial type video for the first time in forever. And I've been saying that for a while, but I'm finally here. I'm finally doing it. So yeah, let's get straight into it. So this video is going to be on the power of compound interest. It's going to be a little bit off the dome, so it's going to be kind of might be a little bit of an improvised, all over the place type of video, but we're going to give it a go regardless, and you guys can kind of let me know what you think of these types of videos. But yeah, I just wanted to talk about the power of compound interest and long-term investing, particularly in the S&P 500. And we're going to go over a couple examples and then also my scenario personally and what I'm kind of looking at. But yeah, so let's get straight into it. So this is my portfolio here. If you're new to the channel, I don't know, this video might draw in a lot of new viewers, so that's why I'm kind of introducing it as such. But I'm completely in the S&P 500. I'm 19 years old, going off to college soon. I just turned 19, and I started this portfolio when I was 18 years old on May 31st of last year. And so far, I've made about $1,000 or around 10% of a return. Now, I haven't been in SPY this entire time. This is only a recent development that I finally kind of realized and did my research and took the dive into just holding the S&P. But you can see I started with around, or not necessarily, but I've been depositing up to so far 10,500, and it's currently at 11,500. But I have almost 22 shares of SPY, and SPY is an S&P 500 ETF, the one that I personally like. Is the one I'm going to be kind of looking at as the example for this video. But yeah, let's jump straight into it. So let's look at the historical average first of all. So the S&P 500, since its inception in 1957, has had a historical average return. So including up years, including down years, including 2008, 2001, 2022, the COVID bull run, including all these ups and downs and craziness. It's had an average return of about 10.26%. So over a long enough period, you can kind of expect to get a return of around 10.26% on your investment on average. So that's going to be the benchmark sort of percentage we're going to use for this video. Now, to just make things as accurate as possible, I am going to take out the expense ratio in particular SPY from this return. Now, this isn't the lowest expense ratio fund out there. VU, I believe, has a lower one. Let's take a look. 0.03, so about half. And then even less than that, SPLG has an even lower expense ratio. Let's take a look at that. Yeah, 0.02. And I believe SPY is about 0.06. I just like SPY the most because it's been the one that I'm used to price action wise. Oh, apparently we're already on that page. So that's why I invest in it. And honestly, the expense ratio difference is so minuscule that it won't matter too much, but I'm just going to be using this as an example. So 0.09. So we're going to take 0.09 out of 10.26, which gives us 10.17. And then we're going to jump over here to a compound interest calculator. And I'm going to first do an example of my own portfolio and how it's going to affect me over the next 5 years and what that's going to look like. So my portfolio currently has $11,500 in it. So we're going to paste that value into here with the expense ratio subtracted average return of the S&P over the next 5 years. And keep in mind, this is with $0 of contribution. So this is as if I basically kept my portfolio as is and never deposited any money over the next 5 years, okay? Which is obviously not going to happen, but that's the example. So as if I deposited no money over the next 5 years, my portfolio would be valued at $19,102 with 0 deposits. If I were to just leave this account, not touch it, we would essentially earn almost $8,000 just out of thin air over the next 5 years, just like that. So that is already showing you some of the power there. And you can see our overall rate of return is about 67%. So that's really good, and that looks really good. And we can see on this chart here, I don't know, it's not really a good example of compound interest, but you can see that. And actually, let me turn this to yearly because I think it's more accurate. Yeah, so a little bit less. But yeah, so you don't really see too much of that compounding effect over this short period of time, but the longer time horizon you have on your investment, the larger and more exponentially impactful this compounding effect will have on your portfolio, and you'll see it gets crazy really fast. So we're going to take this same idea and still have no contributions, so keep that in mind. This is an insane return without any contributions. We're going to just double it to 10 years. We're going to see what that looks like. And so now it gets to 30,000. And what you'll notice is basically the interest you earn each year due to the compounding effect is going up. So every single year you're earning more and more interest. It's almost as if you have a job and a salary that's increasing your pay every single year, if that makes sense. And of course, like I said, there's going to be up years, there's going to be down years, right? But over the long term, we're kind of looking at this average return, right? Um, but you can see, I mean, it goes up. So you start at gaining $1,100 a year and you go all the way up to gaining $2,800 a year in just the span of 10 years. And once again, with zero monthly deposits, it's just crazy to even look at that. Now let's bump it up even more. Let's just jump it up to 30 years and eventually I'll put it at the retirement age for me and we'll see what that looks like. So we go to 30 years, look at that, $210,000. So you initially start with $11,000 with zero contributions and the average rate of return minus the expense ratio. In 30 years, you'd have over $210,000, which is just insane. So essentially what this says is by the time I'm 49, yeah, by the time I'm 49, I'm going to be looking at over 200 grand were I to never deposit more money in this account, which once again, that's just insane. And you can see over this long period here, you end up making about $19,000 a year just from your portfolio, from initially making only $1,100. So that's that compounding effect. You're making more and more each year, and it just gets exponentially larger. Now for the retirement age, so I'm currently 19, I believe it's 65, so 65 minus 19, it's about 46 years, I believe. So let's just put it at the retirement age and see where my portfolio of $11,000 with no contributions is going to be at by the time I retire. And that is absolutely insane. So there you go. That's why this is so insane. This is why the compounding effect is just so magical and like a key to building wealth, in my opinion. Because once again, this is with no contributions. So like, this is as if I just left this 11 grand in here and never put another dime into this account. We're going to be at almost $1 million by the time I retire. And that's just nuts. Of course, there's taxes, but you can still see how crazy that is, right? And let's just look at the interest too. So once again, you start out making $1,100 a year, and it goes all the way up to you making like basically a full salary. Like it's basically as if you're working a job, but you're not even working. Like that's how insane it is. 92K a year. Which is just nuts. And you can see here's that exponential effect I was talking about. This is why compound interest is so important, especially the earlier you can start, the greater your return in the future. This is why it's so important to start as young as possible. If you haven't already started a portfolio, no matter how old you are, the best time to start is today. So literally just you should always start as soon as possible, even if you're in your 40s, your 50s, and you don't have a portfolio and you think, oh, there's no point in doing this, there is a point. It's worth it. Even if you have to start now, you're going to have more than you would have had otherwise. It's worth it. Don't live in regret of it. Just start now, is my opinion. But you can see this exponential effect. This green bar is the total accrued interest. You can see that blue bar at the bottom is our initial balance, and you can see how small that blue bar gets in comparison to the orange bar as time goes on, which is that exponential compounding effect. That's just insane, and this is why compound interest is so important. And like once again, this is with no deposits. So let's step it back a little bit. Let's take it all the way back to 5 years. But instead of having no deposits, what I'm currently doing in my own portfolio is doing around 50% of my income, but on average, I've deposited around, I think, $300 or $400, but just to be safe, we'll say $200 a month is what you're looking at depositing, which I think is attainable for a lot of people. Not everybody, of course. Some people can't contribute that much, and that's okay. As long as you're contributing something, even if it's just $5, that's going to have an impact, right? But let's just say, for example, $200, right, a month. So instead of making 18,000, or I guess instead of having a total portfolio value of 18,000, in 5 years I'll have a total portfolio value of 34,000. And of course, you saw that total interest number went up by about 2.5K, which isn't crazy. Of course, you'd be thinking like, oh, I'd want way more than that, but that's worth it though, you know? Plus you'll have 34K in your portfolio. And for me, $200 a month is a very attainable goal. And I'm hoping that once I get a job, once I work internships, I'll be able to step this number up, you know, 5-fold, if not more, is my hope. Which would allow me to have some insane future gains. That's my hope though, once I get into college. But yeah, so it would basically mean I'd come out of college, and this is kind of the example I'm using, is 5 years, about the time I'd be in college. I'd come out with about 34 grand and about $10,000 in gains. And if we look at that on the chart view, you can see we'd be making about $2,400 a year coming out of college from our investment portfolio, which is really good. And that's with a low deposit amount that I'm hoping to, do way more than per month. And by the way, I should put this on monthly because we're going to be making deposits monthly. There we go. But yeah, so let's step this out again. Let's do the same experiment. Let's step this out, 20 years, and let's see where it puts us at. And there you go. So that's just insane. So I don't really remember what the previous example was, but I'm pretty sure this was way later than 20 years. It might have been 30 or something. I might be misremembering that. But no. So in 20 years, so when I'm 39, if I just deposit $200 a month, then I'll have $242,000 in my investment account and $183,000 in gains, which that's already crazy. I mean, that's already beyond worth it, right? And you can see that yearly interest gets up to 24 grand a year at the age of 39 from just investing, which is just nuts. From initially being at around 1100. And you can see that total interest number gaining every single year. Once again, $200 a month starting with around 11K. Very attainable for my situation. Of course, not everybody, but once again, I just want it to be very clear that I'm hoping to do much more than 200. So this is just a low ball example. So this crazy number is technically a low ball for what I'm hoping to be able to do, which is just nuts. But let's bump it up again. Let's do what was the retirement one, like 46 or something like that? Let me do the math real quick. 20, 65, 60. So wait, 46 years. But let's not jump there quite yet. So 46 years of the retirement age. But let's just do 28. 28 years. Let's do 30 years. I don't know why I did 28. Getting distracted. There you go. 700 grand. So by the time I am 49, I'll have $700,000. And that'll be a yearly return of $68,000. And of course, on a monthly scale, like I was kind of saying, that's around $6,000 a month of income. Of course, it's in your brokerage account, and if you were to sell it, you would have to pay taxes on that. I want to make that clear. You do have to pay taxes. But also, another thing that's very important, maybe I'll make a video on this too, is having a Roth IRA and a 401k where it's tax deferred, or I believe with the 401k it's not necessarily tax deferred, but it's a different thing. But with the Roth IRA, at least, it's tax deferred on your gains. So you could be doing this in your Roth IRA as well as in a normal brokerage account and not have to pay any taxes on it, which is even crazier. So you could technically do this like 2 times over or 3 times over and have no taxes on 2 of them. So that's a whole thing. But yeah, no, so 700K and about $68,000 a year by the time I'm 49. Now let's bump it up to the retirement age, just for the sake of it. And there you go. So once again, like I don't even know what to say. Power of compound interest. So you're only putting in $100,000 and you're getting out 3.6 million. Like, I mean, there's nothing to even say about this. Like you just got to do it. It's just crazy, Like I don't even know what to say. You put in $100,000, like that's probably the craziest investment of all time. You know what I mean? You put in 100K, you get out 3.6 million. Like, I mean, seriously, who's not wanting to do that? And you can see once again, like, look at this. Total deposits are minuscule in comparison to this like exponential chart of orange bars, which is the acquired interest. I mean, like, look at that. That's just nuts. Like, this is what I'm trying to preach to people. Especially my friends. Like I said, I'm 19, so I'm trying to get into this as early as possible so I can see these results in my future. I've been trying to convince my friends to do the same thing. It's been very difficult to convince people that they need to be doing this too. But what's important, I guess, is that I'm doing it. But that's why I'm making this video on YouTube, because people need to know about this. The more people that we can educate on this kind of stuff, then the more people will have, lots of money and wealth at an earlier age. So that's why I'm trying to make this video, because people really need to learn about this, and there's not a lot of good videos out there covering this stuff. A lot of people like to shill, day trading and all these weird investing strategies, when really all you need is this simple buy and hold strategy, and you're going to see success if you just wait long enough. I mean, like I said, 46 years, 30.6 million, like, that's just insane. And that's for $200 a month. That's less than, most people's car payments, right? And I get that it's still a lot of money to put $200 a month, but I think that's, with cutting some expenses, that's affordable for a lot of people. And of course, I'm at a very young age where I have a lot of time to do this, but even if you're, in your 30s, 40s, 50s, whatever, you still have time to make this work. Especially if you're in your 20s or you're like my age or you're too young to even invest yet, just get started on this because it's very important. And yeah, like you can just see how crazy this is because at the bottom, that's the yearly interest, right? Like this at this point, you're making over 350 grand per year just passively by investing in the stock market. 350K a year. That's like the high. That's like in the top 1%, if not even higher, of salaries in the United States that you're just getting from having invested at a young age. Like that's just insane. And that's with $200 a month. Like if I were to make this $500 a month, like because I know I'm going to be able to over the long term average a much higher deposit than 200. I mean, if I do it to 500, look at that. It's like what? $7 million. That's like over double of what we were looking at before. So at this point, I mean, at this point, $500 a month, you're gonna have over $7 million by retirement age. And I get that retirement age is way far away, right? And it might be like, oh, I don't want to save all this money for when I'm super old. But if I just crank this down to 30 years, like even at 30 years, it's over at 1.5 million, and that's when I'm going to be like 49. And this is, like I said, with a deposit rate that I can easily trump. You know what I mean? So like, it's just crazy. I get so like enthused and excited about this. You can probably tell from my voice. I get very excited about this kind of stuff because it's motivating, it's encouraging, and I want more people to know about this. But like, you're making 700 grand a year on average from this. That's just ridiculous. Yeah, I don't know, guys. I hope you enjoyed this video. It's kind of gone off the rails a little bit. But yeah, I hope you enjoy this video. I just realized it's 16 minutes long. I don't know how I possibly talked about this for 16 minutes, but apparently I did. And you know what? One last one. We're just going to look at like my college outcome if I were to deposit this much a month. I mean, there you go. Like if I came out of college with 57 grand invested, that would just be crazy. Like that would be absurd. 16K interest earned. That's just nuts. That's over like what, 2 grand, even more than that, over 3 grand per year in gains on average. That's just ridiculous. And once again, average rate of return. So it could have a better period, it could have a worse period. That's the average. But yeah, so sorry that went a little bit off the rails once again. But I just get really excited about this kind of stuff and talking about this thing, and I want more people to know about it. I want it to inspire and to motivate a lot more people, hopefully young people. I know there's a lot of young people that watch my channel. I want to inspire and motivate you to start this journey yourself because, I mean, like I've showed, no matter what age you are, this will carry you far, and it's really simple. You just got to deposit on a consistent basis and invest it straight into an S&P 500 index fund and just not touch it. It's as simple as that, and you're gonna have wealth at some point in your life. And yeah, so I really hope you guys enjoyed this video. Let me know down in the comments if you like this kind of video, if you want to see more videos on tutorials or compound interest or just videos on stuff that isn't just my portfolio. Just let me know down below. If you're not already subscribed, please consider subscribing. I make weekly portfolio update videos, and I'm also, like I've been saying, and this is the first video, I've been trying to sort of deviate and make some more tutorial-based videos and just talking videos like this, so hopefully I can do more of those, and if you're interested in that, please consider subscribing. But yeah, thank you for watching this video, and I will see you in the next one. Goodbye.